Let us continue chapter 6, Forms of Business Organization, part 2. We have completed cooperative society, advantages and disadvantages. Next, we have started joint stock company. What is the meaning of joint stock company and what are its features? Now, I will explain you what are the advantages of joint stock company and what are the limitation of joint stock company. The first advantage of joint stock company is huge capital fund. A company divides its capital into small fraction. That is, actually a company, the amount of shares the company can subscribe lifetime, it is known as authorized capital. That authorized capital is divided into every year so that they can issue the shares. For example, 1 lakh shares of 10 each. So these 1 lakh shares, again it can be divided into smaller parts, like some shareholders purchasing 500 shares, some shareholders purchasing 20 shares, some shareholder purchasing 100, like that. So here a company divides its capital into small parts. So attraction to purchase more number of shares always remain because voting right is per share. Here how many votes are taken? If a person has a 50 shares, so like that he can vote. The number of votes are more means number of shares are more means number of votes are also more. Second, easy transfer of shares. The member of the company can sell shares and get whenever he desires. Even he can purchase shares whenever he requires. So there is very easy purchase and easy sales. But transfer of share is not allowed in private company. Transfer of share is allowed only in public company. Next, limited liability of members. Here the liability of the member is limited up to the face value of the shares. If whatever is the shares, if a person holds 50,000 as a shares, then his liability is 50,000 only. He need not to sell his asset and personal properties. In circumstances of liquidation, when the company is closed, at that time they need not to pay more money than face value of shares. Means there may be chances that he will not get the money of his shares because that money will be used to pay the debt. But he need not to pay more than his share. So this is very important feature, that is limited liability of members. Separate identity and perpetual life. The company is having a perpetual life, means continuous life. It is not affected by any death of a person, insolvency of the person, insanity of a member, means mentally retarded. These things are not possible. Even though anybody dies, the company will work accordingly. Advantages of large scale. Here large scale purchase and selling are available because large scale funds are there, modern machines, more capital is there, means a company can purchase more machines, the company can hire experts, the company can do the research activity of its own because they have a benefit of large capital. Efficient management. The management of the company becomes professional and efficient due to the expert services and efficient director. Due to the high capital, more capital, they can appoint the manager who is well qualified, skilled. So the management will also takes place efficiently. Democratic management. The company is managed democratically by elected representatives of member. So who is a director? So director, he gets majority of vote in election. That election is done in general meeting. So here the manager is appointed on the basis of democracy. Benefit to society and nation. Here public invest their savings in shares, debentures and public deposits. So what benefit of people get? People can do the savings. On their savings, they can get dividend, interest. Next advantage is that large scale production takes place, employment opportunities available. Some company spends a part of their profit for arts, garden, school, college, playground. Again, the nation gets benefit. Some company provides employment opportunity. So company pays crores of rupees to the government by way of tax. Again, the government is also getting benefit. So these all are the benefits by the company to the society and nation. What is a limitation of joint stock company? First limitation is lengthy and expensive incorporation procedure. As you have seen, sole proprietorship, partnership, next HUF, the procedure is not that much complicated as it is in joint stock company, because here the company has to prepare the documents like memorandum of association, article of association, then they have to register, then they will get the certificate. Afterwards they have to keep expert services, they have to pay a fee, registration fee. These all are of very high charges. That's why the registration of joint stock company is very complicated. Legal restriction, a company comes into existence by law. So your company has to offer legal provision during its lifetime. Like company has to make the statement, balance sheet, reports, account, and time to time they have to submit to registrar of the company. And even some share you cannot increase and decrease the value of shares very easily, because SEBI, that is Securities and Exchange Board of India, it have a full control on the shares of the company. Increase in administrative expense increases because here high fees are there for expert, for manager, for research. Here all the money is paid, high value money is paid to them. That's why the administrative expense is more. Autocratic management, though many rights are given to the members, but they are enjoying only for namesake, because due to voting right per share, some members can get control through groupism and impose their desires. The people can come in a group, whoever are having more shares, and then if they vote, then definitely they will only be victory. So here autocratic management, though it is said that it is democratic, but really if a group of members come together and if they vote, then definitely they will be only elected. That's why here autocratic management, the company use the money, asset and secret information for their personal interest. Sometimes the director can use for himself, for selfishness. Difficulty in maintaining secrecy, because it is not possible, the company has to show its final account to registrar of company. Whatever information regarding the shares, regarding the asset, liabilities, everything has to be shown in the accounts. So it is not easy to maintain, difficulty in joint stock company. Delay in policy decision. Consent of the members are required for making policy. Notice of the meeting is given, then the people will come. Afterwards, if the certain group of people does not come, again the notice has to be sent, warning letter has to be sent, then resolution has to be passed. All that, on the spot the decision is not taken. It is a long process. After completing the process, then only if the majority people vote, then only the decision can be taken. This means it takes a long time for taking the decision. Less flexibility. Flexibility means changes. As sole proprietor and partnership is a small form of business, so easily changes can be taken place. But here if we wanted to make a change, it is like a Lok Sabha and Rajya Sabha. A resolution is required, lot of time is taken. Sometimes the approval of central government is also taken. Encouragement to speculation. Speculation means in future if the prices of the shares will increase, So the people will buy today so that they can sell tomorrow. Such kind of a speculations take place in the stock market. The speculation in share, and because of this what happens, speculation is not true. There may be chances that in future the prices will increase, but if it does not increase, then the small investors who keep their savings, they are affected because of this. Disadvantages to society, because sometimes strikes takes place, lockout take place, autocratic management is there, more importance is given to money. Here there is an unequal distribution of income. So this is not good to the society. So these were regarding the advantages and disadvantages of